US Treasury, I heard just off Twitter, I'm not sure how real and reliable this could be. US Treasury could be asking for another $2 trillion in debt capacity, and we know that US debt ceiling is set to be reached on the 16th of May, and we know that this is of course one of the big issues that they're debating right now.
Yeah, look, you know what I suggest they do there is cancel the ceiling permanently. In other words,
so just spend,
apply
print,
to Congress to never have a ceiling again.
Yeah.
It's this weird thing that they put in when they wrote the Constitution back in 1777. So it's obviously a complete nonsense, because as over time, you know, inflation and so on occur, you'd expect for, you know, the sort of ceiling to get hit. Anyway, the numbers I'm reading on this suggest that tax revenues are coming in so strong in the US that the debt ceiling is soon to be an issue of the past.
So you're saying that having a debt ceiling is a weird thing that the government...
Yeah, we don't have a debt ceiling. South Africa doesn't have a debt ceiling.
We're prudent, Paul.
We've got an economy which has expanded by 30% in the last 5 years or something. So, you know, government borrowing has as well. So we don't run into the ceiling. I mean, what kind of a thing is that, having a debt ceiling?
So silver has been very volatile.
It's like having an overdraft at the bank. How ridiculous is that?
Okay, Paul. Silver has been very volatile.
Oh, my goodness.
Yes, it's been fascinating, hasn't it? Have you been watching?
Yeah, it's been plummeting, and apparently it's got to do with margin requirements going up. So obviously, if you trade this stuff, you don't always trade the physical, you're trading the futures, and there's a margining requirement. But there is no question that the commodity market is subject to speculators who move through the commodities one after the other. They're currently visiting their charms on the silver market. It's got nothing to do with supply and demand. It's all total nonsense.
Okay, ADP numbers looking slightly weak. Sorry to disappoint you. And also, the ISM non-services number, 2.8 points away from contraction.
Yeah, no, so exactly. The jobs week, it's the first week of the month. So in the US, we always look forward to the non-farm payrolls. But this ADP thing is a precursor to it. So you're right, it did come in a little weak. So, you know, the market's down like 1.5%. But what I really wanted to get across in tonight's thing is that if you're investing other people's money, or even just your own money, one of the key things is patience, discipline, and you know, not being too close to the trigger. So as far as long-term investors are concerned, when the market is down like 2%, that's like not even worthy of commentary. If the market was down more than 5% in the day, I might be slightly concerned. If it was down like 20% in a day, I'd suspect that the computers had got it wrong. So, you know, this stuff's like water off a duck's back.
So you're still smiling, Paul?
Oh, always.
Fantastic. Mr. Paul Theron from Vestac joining us today for Mad Markets.